please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Back you tune in to Halftime Report on CNBC TV18. The mid-cap space is dragging its feet. So the mid-cap index is down close to about 1/3 of a percentage point. Weakness is seen in many of these oil marketing companies, but even names like Ashok Leyland are struggling in trade. So that's down close to about 8.5%. Keep your eye on that. A few banking names like Bank of India, South Indian Bank, Canara Bank are also struggling a tad bit with cuts of close to about 1 to 2% in most of them. But let's shift our focus then to Essar Steel. Sources tell CNBC TV18 that the lenders to debt-ridden Essar Steel yesterday voted to allow bids from both ArcelorMittal and Numetal on the condition that they repay dues to remain eligible. Ritu Singh with the details. Ritu?
That's right. In the Committee of Creditors meeting that was held yesterday, it was passed a resolution to allow both of the bidders, that is ArcelorMittal and Numetal, were allowed to participate as per the resolution that has been cleared by the lenders. Now, there is, of course, a condition attached. Both the players will have to repay dues of all the defaulting companies that they're associated with to be able to be eligible for the company. We understand that Arcelor has to repay dues of close to 7,000 crores for KSS Petron and Uttam Galva, whereas Numetal, of which Revant Roya is part of the consortium, will have to repay dues of all Essar defaulting companies that could run into many thousands of crores, given that the overall debt is close to 1 lakh crore rupees for the company. We also understand that starting today, both the players will be given a 7-day period to repay, to clear all these dues if they are to remain eligible. But as per the current offers, ArcelorMittal, as we had reported, remains the highest bidder.
Okay, all right. Thanks so much for that, Ritu. Well, Rima, I'm looking at Uttam Galva, because the biggest problem for Uttam Galva is always the debt in the books. Now, the details that Ritu just gave us is that if ArcelorMittal or Numetal, if they want to be eligible, they have to go ahead and pay all their outstanding loans. And ArcelorMittal in particular, they have an outstanding of around 7,000 crores approximately. That's for two entities. One is KSS Petron as well as Uttam Galva Steels. Now, remember, the problem for Uttam Galva was always that they had this big debt in the books. It was at around 4,000, went to 4,500. And last count, it was at roughly around 5,500 crores odd. And that's the reason why the company has been reporting losses. So if you just take a look at it, the company had reported in the last year a loss of around 800 crores odd, but majority of that was because of finance costs. The question we are asking is, if the 7,000 crores, out of which 5,000 crores is used to repay the debt of Uttam Galva, can things improve? One will be the operational performance will improve, because currently they're running at little below 50% capacity utilization levels. What does Uttam Galva do? They take HRC, they convert it into CRC, and then in fact they give it back to their client. So people are not really putting their HRC with Uttam Galva because they are scared that, in case it gets into NCLT, in case the entire unit is seized. Now, if this happens, then in fact capacity as well will ramp up, and also it will be virtually debt-free. So they'll start reporting an operating profit. The stock has been a big underperformer, only 200 crores of market cap as of now.
Okay. Thank you, Nigel, for that. Let's invite our technical experts to get a sense of a couple of trading ideas. Ashwini Gujral and Sandeep Wagle join in. Ashwini, just about ambling on the benchmark indices, not doing too much on Nifty and Bank Nifty. How would you approach them?
See, the market texture has changed in the sense that now large caps are outperforming. Hind Unilever, we just saw making highs of the day. Reliance has had a sharp move. So the index is not going to fall, and that's a big relief for index traders if large stocks are moving up. Mid caps is a totally different story, and they are underperforming. So right now, particularly on tech stocks, I think since morning they have consolidated quite a bit, and a second leg on the upside could start. Even on the banks, yesterday more banks were down than were up. Today, more banks are up, and these are strong constituents of the Bank Nifty. So my sense is even on the Bank Nifty, you could head higher. And finally, a particular theme, which is, the consumer stocks, they are doing fairly well. So Titan, Jubilant, Tata Global, these sort of stocks, HUL, they are doing well. So while, at the end of the day, I would expect, the markets to close higher, but market bet may not do as well. So for the moment, Tata Global is a buy with a stop of 287, target of 304. RIL is a buy with a stop of 970, target of 995. And JSPL is a buy with a stop of 258, target of 272.
Okay, all right. JSPL comes out with a set of numbers, so we're keeping an eye out on that stock. It's looking quite strong, expected to report a profit after many, many quarters, close to around 13 quarters. But Ashwini, besides these picks that I've given, I want to ask you about Oberoi Realty. The stock is moving higher. It's moving higher on good volumes. How is it looking at the charts?
See, Realty overall is moving up. Godrej and DLF have moved up. It's not really my top pick. I would still go with the Godrej or a Soba developer.
Okay, all right. Let's get in Sandeep then to this conversation. Sandeep, what picks do you have for us?
Afternoon, Nigel. I would go with a buy in a Havel, stop loss of 550, target of 568, and a sell in a Balakrishna Industries, stop loss of 1240, target 1195.
Okay. Thank you, gentlemen, for joining in. Titan has slipped a tad bit. It's still holding up in the green, but it's off a bit from the high point of the day. Remember, numbers will be coming out tomorrow, and we are expecting a solid quarter with margins improving to 10% versus 8%, which will drive a 40% increase in the company's profitability. So expect a good quarter. The stock is holding up in the green ahead of its numbers tomorrow, but come off a bit from the highs. Let's get in the early rates from Europe then. Asia's had fairly insipid session, so Hang Seng was practically unchanged, and seems to be the case with the European indices as well. So unchanged for the CAC. The FTSE is up about 0.3% as we speak. The DAX too flat. Get into a break. When we return, Walmart will sign a definitive agreement with Flipkart today to know more about this mega deal, the biggest in the e-commerce space. Stay with us.
Welcome back. Markets have moved to the high point of the day. The European markets, no real worries out there. They have opened up more or less flattish. And our markets have moved to the high point of the day. You have Reliance Industries. That's really leading the way. It's up close to 100%, but that's the big boy on the Nifty. And that explains why the Nifty has moved virtually to the high point of the day. You have other stocks as well, like a Yes Bank. That's moving quite well. And Grasim, when we started off the show, well, it was down close to 100%. It's cut its losses. It's on the verge of moving into the green. A couple of other stocks as well that are doing well are the likes of HUL as well as Axis Bank. Both of them have spiked up. But it's not just the frontliners. Even some of those mid-cap stocks like Indian Bank, L&T Finance Holdings. Just pull up the intraday chart. You'll see those stocks, in fact, have spiked up. Keep an eye out on a couple of them. On the flip side, though, we have a few stocks that are slipping in trade. Kajaria Ceramics, well, that stock has moved lower. And Apollo Hospitals as well has come in for a fresh round of selling. So just keep an eye out on a couple of those stocks, Rima.
Okay, so that's the update coming in from the mid-cap space. A couple of these, companies which have reported numbers like Syntex Industries came out with a good set of earnings. That stock has gained close to about 10%, while Syntex Plastics, which will be declaring numbers later today, is also higher in trade. But the big deal that we will be focusing on, and CNBC TV18 has been on top of that, is the Walmart-Flipkart deal. Walmart will sign a definitive agreement with Flipkart today to acquire around a 75% stake for $15 billion. CEO Doug McMillon will be in India to close the deal. That's an exclusive. Shireen Bhan joins in with the details. Shireen?
Well, that is right. In just a few minutes from now, perhaps, we are going to see Doug McMillon ink that deal. The Walmart Global CEO is currently in Bangalore, and we are given to understand that shortly that definitive agreement will be inked between the US retail giant to pick up majority control of India's homegrown e-commerce unicorn. Now, as we've been reporting here on CNBC TV18, the deal is worth $15 billion. This makes it the largest FDI deal into India. Reliance, BP, Essar, Rosneft, all lower than this particular transaction. Now, let me break down the deal for you. As we've been reporting, Walmart's impending purchase of a controlling stake in Flipkart will include about a $2 billion in new equity funding, as well as the entry of internet giant Google as a key shareholder in what will be the American retail giant's biggest acquisition to date in the e-commerce market. Now, again, deal structure. Walmart will buy up to 75% in Flipkart for about $15 billion, and that values the Indian e-commerce company at about $20 billion. What we are also given to understand is that from a tax liability point of view, Walmart will deduct the possible tax outgo before making the payment to Flipkart. Now, the acquisition, which will be announced in a short while from now, will be funded with the existing cash reserves as well as new debt. Walmart is expected to hold a majority stake in the entity, but the American retailer and Singapore-based Flipkart are also in talks with other potential investors to raise funds, and that could pave the way for Google to come on board as a key shareholder. It will also lead to the exit of SoftBank. As CNBC TV18 has been reporting, SoftBank will exit Flipkart. Other investors will also participate in raising funds, but that is after the acquisition of Flipkart by Walmart is closed. Post the deal closure, Flipkart's financials will be reported as part of Walmart's international operations. Flipkart will also look to leverage Walmart's retail expertise and its knowledge of the grocery and merchandise supply chain management. The investment by Walmart will help the Indian company build retail infrastructure, especially in rural India, and also set up the agriculture supply chain. Flipkart and Walmart will operate distinct brands after the deal is closed. Flipkart, of course, runs fashion portals Myntra Jabong, payments unit called PhonePe, the logistics company called eCart. But globally as well, this is going to be an important part of Walmart's international strategy. So it does expect headwinds on its pre-share earnings after the deal is complete, at least in the near term. Subsequently, it hopes that this will be EPS accretive. The big news, the company is expected to take Flipkart public, perhaps in India, and make it a majority-owned subsidiary in a few years. Just for the benefit of our viewers, I mean, this is a bittersweet moment for India's startup ecosystem. Flipkart was founded in 2007 by Sachin Bansal and Binny Bansal. Binny Bansal will stay on. Sachin Bansal will exit. Both, of course, were former Amazon employees. The founders, of course, are not related, and we are also given to understand that early investors like Tencent and Tiger Global will continue to hold on to some stake and will also find some board representation as well. They will also, of course, continue to back the leadership team. Kalyan Krishnamurthy, along with Binny Bansal, will continue to lead operations. Krish Iyer of Walmart India perhaps will also get a board seat. So that's, of course, the big development to watch out for. We're given to understand that any minute now the deal will be closed, but an official announcement is likely this afternoon.
All right. Thanks so much for that, Shireen. We'll wait for that big announcement then. Yeah, Rima, you wanted to add something?
No, I'm just saying Flipkart's come a long way. They started in 2007 in a two-bedroom apartment in Bangalore, and they ended FY17 with revenues of 20,000 crore rupees. So in a span of 10 years. We don't know yet the FY18 numbers, but FY17 was 20,000 crore rupees.
All right, absolutely. So we'll keep an eye out on that. For the time being, just pull up a couple of stocks actually from the broader markets, BF Utilities and BF Investments. Let's pull up BF Investments first. That stock's gone through the roof. I think it's up close to around 11%. All of a sudden, that stock has got up and moving, and BF Utilities as well should come up for you. Just take a look at that. Volumes are spiking up. I don't know whether there's some fresh news that's coming in there, but both those two stocks, suddenly they've taken off. They've moved to the high point of the day, and volumes have really picked up just in the last half hour or so. Keep an eye out on both those two stocks. We have seen these stocks, once they get going, they really move higher. But we'll keep an eye out to see whether or not there is some news flow that's coming there. Well, on that note, we'll slip into a short break. You come back and we'll get your previews in terms of what to expect from Eicher Motors as well as JSPL.
Let's focus on the key earnings which are expected today. Auto major Eicher Motors will be declaring numbers. Sonia, we know from the sales volumes and the kind of demand Royal Enfield enjoys, it should be a strong quarter for Eicher.
It's expected to be a good quarter for Eicher Motors this time around. Both its divisions, the Royal Enfield as well as the commercial vehicle segment, have done well. In fact, the pace of growth has been quite scorching in the Royal Enfield business. This time around, the volumes have gone up by 27% on a year-on-year basis. And if you compare it to the last 3-4 quarters, the last 3 quarters on an average, the volumes have gone up by about 15 to 18%. So things have looked pretty good. Not just that, realizations also for Royal Enfield are expected to rise by almost about 4.3%. Remember, there was some capacity constraints the company was facing, but now they've sort of overcome that. They do have higher capacity, and because of that, their average monthly sales volumes have also gone up, and demand continues to be quite strong. But it's the commercial vehicle business that was the big surprise this time around. Remember, CV sales have been at a record high. This time, volumes have gone up by 33% and we're expecting realizations as well to go up by almost about 6.5%. The CV segment in general has been good for the industry. There was an overloading ban in several states, because of which, higher tonnage trucks were being sold. And all of that put together will result in better margins for the company.
Okay, Sonia, we'll wait by for those set of numbers. But for the time being, I think we're getting Arvind's numbers that should be flashing for you on the screen. The net profit number, that's coming a tad bit better. Just be cautious in case there is any kind of one-off. But the net profit is looking better. All right, we have the top line as well as a tad bit better. So if I saw that number right, it was around 80 to around 100 crore beat in terms of the top line. Let's pull that number up for us yet again. The EBITDA number as well. Whoops, that's a big beat actually. If that number we can go by and there is no one-off in that, it's working with a number of around, we were working with around 250 crores. It's coming at around 290 crores. So that's more than a 15% beat on the operating profit itself. Let's get more clarity over there. The margins, that's a beat of nearly around 80 basis points in comparison to what we were working with. So just to rewind that number, the net profit looked good. We were wondering whether there was a one-off, but no. The top line's a beat, the operating profit is a beat, and the margin beat of around 80 basis points. That's something that the street likes, and that explains why, in fact, the stock has moved to the high point of the day. Rima, have got hold of any more details?
No, I'm just calculating the revenue growth. So the revenue growth stood at 21%, which would compare with an expectation of 15%. So it's been an all-round beat by Arvind this time around. We were expecting a strong growth in the branded apparel business, so we'll wait by for those numbers. For textiles, growth has been in high single digits, so that's some internal that we'll await. But for now, it appears to be a strong beat by Arvind in revenues, margins and profitability. Margin beat in particular stands out.
What's the branded apparel business, Rima, the growth we are working with?
No, it could be perhaps a 25% growth is what I think the estimates on the street were. Yeah,
so it's around a 27.5% actually, because I've got the details out here. The branded apparels business has come in at around 1,071 crores. That compares with around 840 crores on a year-on-year basis. So that's a 27.5% growth. So that number looked quite good actually. The textiles division, where there's a small growth
9.3% in the textiles business, but that was estimated to grow by 8%. So I think on both branded as well as textiles, there is a marginal beat. Branded, as you said, is 27. Textiles has seen a growth of 9.3%.
9.3%, correct. And also, Rima, I think the reason why there's such a big beat in terms of the margins is because the branded apparels business, we have only the EBIT numbers. That's coming at around 50 crores. Yeah. That compares with around 14 crores on a year-on-year basis. And on a sequential basis, it compares with around 29 crores. So I think that's really where the kicker has come in for Arvind. So the numbers on the whole look good. The textile business grows by around 9%. The branded apparels business grows by nearly around 27.5%. And importantly, on the EBIT front, that's the operational front as well, it's done a tad bit better. So I think those numbers look quite good. Mangalam joins us. Okay. He tracks this very, very closely. The stocks moved to the high point of the day. Mangalam, you like these numbers?
Absolutely, Nigel. Tell you what, because if you take a look at the branded business, the revenue growth at 27.5% is above what we were expecting. 25% revenue growth is what we were working with. And the EBIT in the branded business as well. If you take a look at just their operational performance, they've done well, and which is why the stock is at the high point of the day.
Okay, let me read out the statement coming in from the CFO, Mr. Jayesh Shah. He says, during the quarter, we saw weak demand trends in the apparel industry, especially towards the beginning of the quarter. However, demand started picking up in March, and we expect similar growth trend to continue in the coming months. Our textile business remains on a firm footing and delivered good results in line with expectations. While there have been shorter-term challenges on account of reduction in duty drawback rates and other export incentives, the medium-term outlook for the business remains strong. Finally, on the business restructuring, the process of demerger is proceeding as per expectation, and they expect the three companies to list separately within 4 to 5 months. So management commentary as well, fairly upbeat. But it's the margin performance in the branded business which is the big kicker for Arvind, with the EBIT margin, I think the EBIT going to 50 crore versus 15 crore.
Yeah.
So that's been the key driver for Arvind's performance this quarter around. I guess we've run out of time.
Yeah, we've run out of time, but safe to say that those numbers look better than what we were working with. It's an all-round beat, it appears, as of now. We'll wrap up on this show. You stay with us. Business Lunch comes up next.